Hey, what's going on, guys? Welcome back to my channel. This is Blood Phantom 81. Today we're going to go over the stock market and basically do my monthly stock market recap and update and predictions video. So let's just jump right into it. So the market's been consolidating more or less for the past, let's say, 3 to 4 weeks, honestly. So let's just jump right into the S&P 500. So this period right here is actually the start of June, and as you guys can see, we're only slightly above that level now. But the consolidation that we've put in since the start of June was basically this triangle right here, and we seem to be breaking out of that. And like a lot of things in life, I mean, obviously there's like ebbs and flows, and whenever we're stuck in these periods where it seems like we're going nowhere, it's harder to sort of zoom out and look at the bigger picture. Whereas something like this, for example, it seems like, okay, the market's going nowhere, it's just deciding where it wants to go. But really, this period came after like a really huge move. Same thing with this consolidation. Obviously, this consolidation came after a really big move, and now we're consolidating. And yeah, like I mentioned, it's quite exciting because it seems like earlier today, this morning, we did get back above this range, sort of retested it, and now it looks like we want to head higher. And so, yeah, it just helps to sort of zoom out a little bit. And yeah, it's exciting to see where the market's going to go. The other reason why this is so important, in my opinion, is let's go ahead and get rid of these triangles. So the period that the S&P 500 has actually consolidated above are two really major moving averages, which is the 50 and the 200-day moving averages. So it looks like we had something like a double bottom, and obviously we're sort of using these moving averages as support. Once again, just goes to show how similar this time period is to 2019. I know you guys might be sick of all the 2019 comparisons, but go ahead and check this out. So once we did get above this 200-day moving average, it was sort of like off to the races. Obviously, there was like a few retests, a couple retests, but once we got above it, we went approximately 6% above this moving average. As you guys can see, that's about 6%. And eventually, when we did stall, we stalled about 6% above this moving average. Then we did a retest back in 2019, and then we did a retest back here. And the crazy thing about the retest is that it was actually not like a straight line drive. It was actually like sort of two retests almost. And same thing here. It's almost like two retests. And now we're consolidating higher. So obviously the difference here is that everything in 2020 is happening so much quicker than 2019. And as a result, like if you look at the 50-day moving average, it's not even above the 200-day just yet. It hasn't really had a chance to catch up. But yeah, we'll see if this is what was needed to actually break higher. I don't anticipate us to just completely head higher. I think it's possible that this gap area provides some resistance. So if we do follow through later this week, it's possible we stall out here. Maybe we need to do like another retest before heading higher. But yeah, I mean, everything points to the market really following through. Let's go ahead and take a look at my account balance. So my account balance is doing pretty well too. I think during my last video, I was probably around like 155, I think. So currently I'm at 174, so that's about a $20,000 increase. The one good thing I did was I mentioned in my last video that I was going to take profits sort of near the top, and I think I took maybe like 50% profits, honestly. And then the market ended up dropping another 5% like the day after. And yeah, I was able to capitalize on that. And so, yeah, as a result, even though the Nasdaq hasn't technically made an all-time high yet, my account has. So yeah, those subtle moves definitely play a huge role in being able to accelerate gains. Is like once I have a pretty clear signal that okay, maybe the market's overbought, um, I I'm not scared of taking profits at all. If anything, it's a good thing. Let's go ahead and talk about why I took profits. Actually, before we do that, one thing I think is funny is I got really into selling calls and selling puts recently. It's just kind of funny that the options positions that I have are I probably have more options positions than actual stocks at this point, which is kind of funny. I definitely dove headfirst into options. At least on the selling side, I am also buying options. Eventually, I'll get more risky with buying options, but I'm still sort of learning that. But anyway, let's go ahead and jump into the rest of the stock market, shall we? So this is the Nasdaq, and actually it looks like we technically did make all-time highs, which is awesome. And let's go ahead and make this a little bit simpler. So part of the reason why I was taking profits to where I was is because usually gap ups, for example, after really extended moves can often indicate sort of like exhaustion buying. And that's what we got here on June 10th, 2020. So I took some profits here. We also got another gap up here in on June 23rd. I also took some profits here, sort of reloaded. Unfortunately, semiconductors are actually lagging right now, so that's why my account isn't doing as well as it is, but the Nasdaq overall is doing pretty well. But yeah, so after extended moves, if you have a gap up, and in addition to that, if the market's pretty overextended, then that's a good signal to maybe take profits, or at least understanding that the risk to reward is not as favorable as it once was. And so the other really important thing is I think about how stretched the market is relative to its major moving averages. And so in both of these cases, we were also about 16% above the major moving average, which is the 200-day moving average, which is actually pretty much the same amount that we were here in 2000, early 2020 actually. So the market was also about 16% above its 200-day moving average. Not that the market can't keep rallying when it hits this point, and I wish there was an indicator for how far above a stock is above its 200-day moving average, or any moving average for that matter. I don't know if this indicator has a name. I might actually have to make it myself. But yeah, I mean, the risk to reward tends to be less favorable up here. And obviously, you could say, okay, well, what about now? It seems like we're back above there. Yes and no. The fact that the 200-day moving average is sloping upwards means that obviously we're going to be less extended. For example, I think we're actually about 15% now. Not that it makes a difference between 15% and 16%. It's just that because we sort of consolidated right now, I do anticipate us to make a significantly higher high, at least like a couple percent above this range right here. And that's just what tends to happen after consolidation. The only thing I'll note is that, let's go ahead and zoom in a little bit. The only thing I'll note, and this is a 30-minute time frame, by the way. Let's go ahead and take a look at a 40-minute time frame. So like I said, the only thing I'll note is that obviously this move is pretty extended, and we have this previous higher high as resistance. So it would not surprise me at all if we sort of pull back here over the next couple of days. I don't know how deep of a retracement would be necessary. Maybe like something like a 0.382. I'm not sure. Or we could just continue higher. This is not the point where I try to time the top. This is the point where I try to look for buying opportunities. So if we do pull back here, I'll probably just day trade some options that expire probably 3 to 4 weeks out. And that's sort of how I try to compound my gains. The last thing I want to note here is how clutch this 200 period moving average on the 45-minute time frame has been. It's been acting as support every single pullback on the Nasdaq. And it's sort of like my line in the sand. You guys know how much I love the 200 period moving average on the smaller term time frames. Obviously, like when it's sloping upwards, it acts as support, and then when it's sloping downwards, it becomes red and then acts as resistance. And then obviously we got back above it here after getting rejected, and once we did that, it was sort of off to the races. So this is kind of my way of just sanity checking, and because we're so far above our major moving averages right now, eventually when that thing does break, I think we are going to get something pretty significant, maybe heading into Q3. I'm not sure. So yeah, I'm anticipating something like that. But until then, I see no reason to not use this. Like, the trend is your friend until it's not. And so right now, this is our friend right here. The other thing I want to point out is that there's a quote by Mike Tyson, I believe, which is this quote: "It's everyone has a plan until they get punched in the mouth." And so you kind of have to anticipate, what if price starts to head below this moving average? Like, what are you going to do? Because if you have to decide in the moment, chances are you might not make a good decision. In this particular case, it obviously happened so quickly. And like, we weren't getting that sort of, sloping downwards look where it looked really ominous. Like, something like this obviously didn't become ominous until this period right here, but that's something to keep in mind. And look, even if it does break down a little bit below it, I have no problem with getting back in. In fact, false positives are not as dangerous as false negatives, in the sense that, like, these sort of false breakdowns, if we don't really break down, I'm okay with being wrong about that. But if we break down and I don't catch that, that is a way worse. That's a way worse error than the opposite. So I don't know if that actually makes sense. It's sort of like if we're talking about cancer, for example, and there's a decent probability that someone has cancer, you're going to be way more aggressive on potentially telling them, because it's way worse to say you don't have cancer, congratulations, than it is to say, hey, you might have cancer, you should probably go get checked out. So that's the difference between false positive and false negative. So if the market is actually breaking down and I don't take action, I say this is nothing, then that's worse than the market not breaking down and me saying that's okay. All right, thank you guys for watching. I'm going to wrap it up here. Obviously, the awesome thing is that my account's growing quickly, and it's possible I get close to like 180, maybe 185K after this rally unfolds. We'll see, or maybe I'm getting ahead of myself. But yeah, that's going to do it for me. Thank you guys for watching, and I'll see you guys in the next video.